Hello everyone, welcome to today's video. Today we are going to discuss one of the stock from IT sector. Yes, the IT sector has been very rewarding for its investor over the years, and I believe it will remain a growth sector in years to come. Before we invest in any of the stocks, it is very important for an investor to understand the sector first, because we must know the future growth potential in the sector. There are broadly two types of companies in the IT sector. One is product-based companies and the second one is the service-based companies. The product-based companies, as the name indicates, they have their own product to offer to their customers. To name a few examples, like we have Microsoft, Google, Intel, Oracle, and IBM, etc. See, Microsoft sell their operating systems, and Google have their Android systems. Intel, they are into the processors, and Oracle is known for their database, and again IBM is well known for their computer hardwares. Usually their products will be used by the general public or mass population. Unlike product companies, these service-based companies, they don't have any products of their own. Some of them might have the products, but it's not very well known, or it's not their core business. These service-based companies work for other organizations like global corporates, and they provide ultimate software solutions as per their customers' requirement. In simple terms, these service-based companies provide services in terms of skills and expertise. They generally deploy their highly skilled engineers or employees in the customer's project or in the customer's site in order to render the service. The big names here, TCS, Infosys, Wipro, HCL, etc. I hope you get the fair idea what are the two different types of companies in the IT sector. And our focus is on the second type of IT, that is service-based companies, because our stock which we are going to discuss belongs here. India is the most famous and favorite IT sourcing destination. The reason for this, highly skilled professionals and the quality of service, and the most importantly, cheap labor cost. And that's the reason the major global corporates across the world, they source their IT services from India. As per the 1920 data, India accounts to 55% of the market share of global IT sourcing. That means 55% of the IT service requirements are fulfilled by the Indian companies. Add to this, the GDP contribution of IT sector has been increased from 1.2% in 1998 to 8% in 2020. The future in this IT sector is very encouraging and promising. Currently, the IT export market is at 167 billion and it is expected to grow to 350 billion in 2025. That is double-digit CAGR growth. Now, we have discussed about the sector and we know that there is a growth in this sector in the future. Now, let's come to the stock that I am going to discuss today. That is none other than Infosys. Now I will tell you some of the parameters that I consider for analyzing a stock from IT sector. You can also use this framework when you do analysis of any IT stocks. First thing, I look at the size of the company, because most of the customers who like to do business with the large IT companies who can provide them services in different domains. Infosys is one such company. They provide services to various domains like banking, financials, life science, logistics, etc. Most importantly, they are the second largest Indian IT company. Let's consider there is an automobile company and they need IT services in their HR business and customer care division, product design and procurement, etc. So generally, they don't want to go with the 4 to 5 different IT companies. Instead, they want to deal with any one single IT company who can provide them all the services. Second thing, I look into the revenue and expense part. There are two important constituents here. One is offshore and onshore mix, and the second thing is the employee cost. Now let's try to understand what is this terms offshore and on-site. Generally, the clients of Infosys or TCS or any company, any IT company for that matter, the clients are based out of US. Now, these customers in USA generally demand for 1 or 2 employees to be work from client side for a greater coordination. So, in this case, Infosys should deploy their 1 or 2 engineers in the client's place in order to meet their requirements. I'm just taking the example of Infosys, but it is generally true for other companies, other IT companies as well. Now, these employees or engineers working from the client's place is termed as on-site or the on-site efforts. For the same customer or for the same project, the majority of the work can be performed at India. The employees deployed by Infosys on the same project who are working in India, known as offshore efforts. Same way, the revenue generated by the on-site efforts known as on-site revenue, and the revenue generated by the offshore efforts is known as offshore revenue. I hope you get the fair idea of what is on-site effort and what is offshore, and if you are confused, please watch the video again, you will understand. The service performed on-site generally produce more revenues, but margin would be less as compared to the service performed at India, that is offshore efforts. This is because in the case of on-site, there would be a lot of cost involved in the on-site employees. For example, the salary, bonus, incentives, everything will be more for the on-site efforts as compared to the offshore employees. In addition to that, there will be extra cost on visa, traveling, accommodation, etc. So any increase in the employee cost will have an impact on the margin. You can see this through this example on your screen. See, as per the customer point of view, it is very important for an Indian IT company to have their officers or employees on the customer's place for the greater coordination with the client. The bottom line is the IT service companies should maintain a very fine balance between on-site and offshore mix, so that they can take care of their margins as well as the customer satisfaction. Okay, now let's move on to the next point. The next thing that I see when I analyze IT stock is the productivity. Again, there are 2 things under productivity. One is utilization and the second part is the revenue per employee. For any IT service company, their employees are the invaluable assets for them, because it is very important for a company to how they manage and utilize their employees in order to produce more revenues. Let's see what is revenue per employee. This is nothing but how much money each employee generate for their company. If company able to generate more revenue from less number of employees, that is good for company. And you should see this on year basis. If a company increase their revenue per employee on year basis, that is a good sign. In any IT company, at any given point in time, there would be certain employees or certain percentage of employees who will be working on the customer projects. At the same time, there will be employees who are currently not part of any of the customer projects. These employees will be on the bench, and company will utilize these employees whenever there is a new project. Any company which utilizes maximum number of its employees, it's better for the company. Next is the attrition rate. This is one of the major concern for all the IT service companies in India. It is essential that for an IT company to keep its attrition rate at lowest level, because having new employees and training them involve additional cost and time. The next important parameter is the percentage of repeat revenue. See, if an IT company able to get repeat orders from its existing customers, it is an indication that the company is providing quality service at acceptable price. You will get this data from the annual report of any company. The next parameter that I look into, the key acquisitions and mergers. In order to strengthen their competitive advantages, these large IT companies, what they does is they constantly look out for small IT companies which has mastered unique technology or skills, and eventually they will end up buying those companies. These acquisitions and mergers help large IT companies to grow their business further, and also it will help them in finding the new deals. See, these are the important parameters that I usually see when I analyze a IT stock. So I told you in the beginning that I have chosen Infosys based on these parameters. Not just these parameters, I have also look into the revenue growth, profit margin, ROE, valuation and dividend payout, etc. See, it was a very close call between Infosys and TCS. See, both TCS and Infosys at par when it comes to their financial performance. In terms of revenue growth, Infosys has a better edge over TCS. TCS has a slightly higher profit margin as compared to Infosys. TCS has been effective in terms of generating return for their shareholders. The other thing I liked about TCS is they are maintaining a very low attrition rate compared to its peers. Infosys is good at employee utilization, productivity, and revenue per employee. The dividend payout is also good in case of Infosys. What I found more interesting about Infosys is their growing digital revenue. See, the future is digital. Every companies are going through digital transformation. So this will benefit the companies like Infosys who have a competitive edge in the digital business. Let's have a look at the price chart of Infosys. Currently the stock is trading at its strong support zone, but don't buy all at once. Given the current market situation, one could consider buying 40% of the quantity. If the stock further falls, then you can add 30% of the quantity at 1500 range. It's very unlikely that stock will fall below 1500. If at all stock further falls, I will keep 30% for 1300 range. It's just the global market sentiment that is dragging these stocks. The overall market sentiment is negative due to the war-like situation between Ukraine and Russia, rising inflation, and also US Fed to increase the interest rates. Short-term pain will be there because market is not easy anymore. It will test our patience. But the truth is, the people who make the investment in the falling market will eventually make the money. But the key is the patience. If stock gain momentum and rebound from the current level, then I will do the same thing in the opposite direction. So I will add more quantities on the pullbacks. By that you would know I am not in a hurry to sell the stocks. I will conclude here, and if you like the content and video, please press the like button and subscribe to my channel.